Alright, welcome back guys to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go over some key markets, talk about the foreign exchange, the bond markets, the crude oil markets, go over some stuff, and yeah, let's get to it. The dollar index is relatively strong, and you know, markets didn't react very positively to that at first. If you guys go ahead and look at the day's trading session, at 10 a.m. onwards, you guys go ahead and watch. 10 a.m. onwards, dollar index has had a great run up, and of course, what do stock markets do in response? Well, they kind of revolt. They say, "Hey, we don't like that." You know, go ahead and look at the Monday trading session. Initially, it was strong. That's pretty much because 10 a.m. onwards, it pulled back a bit, but then it suddenly started to strengthen, and all of a sudden, these guys get crushed. So for all those Dow futures traders, this is where you got sent to your graveyard, basically because of what the dollar index was doing. And then after that, you guys go ahead and find some support right around here, and pretty much that was based on the open. And what happens to the dollar index throughout that period of time? Eventually pulls back pretty good, then eventually breaks up again, and it breaks up above that trend line at around 7 p.m. onwards. Now we do have an inverse head and shoulder pattern. This is kind of something what I was pointing out at around 2 p.m. in my video, which is my gold and silver review for April 4th, 2011. And pretty much we did break that neckline, and we are trading above that. Now we are finding somewhat of a negative pattern right here, and I think that we will be able to retrace and go back down to that neckline area. If you're able to hold on to it, great area of support, and it could bounce off of it. If it doesn't bounce off of it, then that means that stocks will have a really great day tomorrow. So just want to go ahead and point that out to you guys. Dollar index's weakness is always the stock market's strength. Now let's move on to the Dow Jones Composite, and I just want to go ahead and point out this long-term trend line right here. And pretty much you guys are heading into a double topping pattern, and we are touching that trend line continuously. We've touched it 1, 2, 3, and now for a fourth time. We are trying to close right above it. If you guys go ahead and zoom very closely, we are just having a really hard time with that 12,400 level. I tell you guys, these markets are just having a tough time breaking it. Now, if we were able to finally break it, close right above 12,400 on Tuesday's trading session, chances are stocks will continue roaring higher into the 12,600, maybe 12,800 area. That's where I anticipate this earnings season will take us. Now let's move on to the next chart, which is going to be the Euro-US dollar pair. Euro-US dollar pair. I mean, we got a double topping pattern right here. We did retouch it. We did touch it again, but that touch was pretty much a candlestick touch. That wasn't not really a candlestick, but a tail. Whenever a tail touches the trend line, that's not good. That means nothing. It basically means that you don't have enough strength to break it, therefore you go lower. And pretty much that's where the US dollar has been getting a lot of strength. Inverse head and shoulder, a breakdown in the Euro-US dollar pair, unable to break some key areas of resistance. And yeah, if you guys go ahead and put in some time and go ahead and watch this trend line real quick, you guys will notice that we are touching it once, twice. The more you touch it, the higher it is, higher the likelihood that you'll eventually break it. And you know, later on in my video, when I go over gold and silver early morning, if it is broken, I am going to point out that chances are you're going to see probably going to see gold continue its weakness. And remember, Euro-US dollar, Euro weakens, that means the US dollar strength. US dollar strength therefore means the gold's weakness. If gold weakens, based on what the dollar index does, you can anticipate gold stocks to be weaker tomorrow, and I'm going to go ahead and go over that in much more detail in in my early morning analysis video. Now, on the US dollar Japanese yen front, you guys are noticing that we did break a double topping pattern. We have a really strong indication of trend. Monthly, weekly, and daily trade triangles are pointing out much more strength in the US dollar Japanese yen pair, and I can only assume that there's much more upside to be had in this market. We are trading at around $84.35, and pretty much I do anticipate we'll go back to that $85 area, which is right around here. I do believe we will get back there, and eventually 88. Now in this world, the biggest players are basically the central banks. After that is the institutions, and after that you got the high net worth day traders, and after that you got the amateur pigs and hogs. Now, what we got are institutions being slapped around by the central banks trying to push up the value of their respective currencies to the Japanese yen. Therefore, the Japanese yen weakens. Exports become more attractive from Japan because they cost less. Because you know, the whole entire idea here is that if I can buy more Japanese yen for every time the Japanese yen weakens, that means my Sony TV costs less. You could easily see that since the Japanese yen has already weakened by 5%, or not, well, yeah, basically 5%, Sony can go ahead and sell their TVs for 5% less. That's the whole advantage of having a very, very weak currency. And that's kind of why you see companies like Samsung and LG going ahead and selling their TV sets for much less than what you could find a Sony for. There's a good reason for it. Sony's cost more because of the exchange rates, along with some other factors as well. One of the biggest factors is the exchange rate, and the exchange rate is finally improving in the Japanese favor, in the Japanese corporation, in the favor of the Japanese corporations as well. Now, what you can basically see is that the Nikkei 225 going up on it. You're going to see Japanese stocks report higher earnings, especially stocks that depend on exports for revenue growth. And also, you're probably going to see an improved amount of consumption of Japanese products worldwide, just because of the weakening of the Japanese yen. It's going to be a blessing for those Japanese companies, I tell you. Now, institutions, the arbitrage traders, those that basically go into the Japanese, that have gone into the Japanese yen because due to the Japanese yen strength, they use that for added appreciation, and then they take those Japanese yens and they go off and buy, let's say, a certain commodity like gold. Gold goes up based on, you know, US dollar inflation. On top of that, you bought it with the Japanese yen, so you get inflation adjusted returns. Japanese yen. Then, you know, when you sell the gold, you sell it at a profit, and then on top of that, you take your Japanese yen and you turn around and convert it back into the US dollar for even more profits. And that's sort of what you would call arbitrage. There's all sorts of different forms of arbitrage, but basically a lot of these guys who are doing arbitrage in Japanese yen strength favor are getting slapped, and slapped on the wrist hard. So these institutions are forced to bail out of the Japanese yen, and when you bail out of it in large droves on top of central bank intervention, the Japanese yen could only go higher, at least for the short and longer term. All right, so just keep that in mind. Keep an upside bias for the US dollar Japanese yen. That's where the money's at. You don't want to get killed trying to short this, because it's just not going to work. It just doesn't make sense to do it. And if you want to be on the same side of smart money is going long the US dollar and short the Japanese yen. All right, next, let's go ahead and review the crude oil market. Crude oil market has gone up substantially higher. I'm not surprised. I do anticipate the crude oil market to continue this upwards pace. It has touched 109. I do believe we could go back all the way to 110, 111. People in Libya are getting their butts spanked. And I mean this literally. They're getting slapped around by Gaddafi, and these rebels are just getting pummeled. Now, because of that, crude oil prices are going up based on anticipation of more intervention, global intervention. They're anticipating the Westerners, the people from the West, to support them even more. I'm guessing they're hoping for us to give them money, drop troops down, drop more supplies. It's just going to be really expensive. And I tell you what, guys, the more expensive it gets, the more crude oil prices go up, and also the more deficit spending goes up as well. You could cut all sorts of spending, but if you really want to save money, you just don't go to wars. Wars cause inflation, wars cause excessive amount of borrowing, and wars also are probably the biggest and one of the most, and probably the largest reason behind a lot of our deficits, a lot of our debt, basically. I mean, 50% of our debt is based on war spending. So if we could just avoid another conflict, that would save us a lot of money, on top of pulling troops out of Iraq and Afghanistan. We're not seeing any of that. We're continuing to see intervention in the Middle East, and the Middle East does produce a large supply of crude oil. So, you know, and on top of that, you got riots and rallies all over the place in the Middle East, which is just a melting pot. So, yeah, crude oil prices will go up in the short term, but over the midterm and longer term, I'm not too I'm not anticipating these prices to sustain themselves, because we do have a lot of excess supply, and we also do have a lot of extra production as well. Treasury bonds, I anticipate them to be flat to positive. As long as the US dollar continues trending higher, chances are bonds will go higher as well. That's just been the way it usually works. Now for the volatility index does continue lower, and right now you could probably anticipate a bounce if the dollar index, goes up a little higher. Chances are stocks will probably be flat or negative, and if they're negative, chances are the volatility index will go up a little bit. But I anticipate this downward trend to continue in the volatility index. So if you will have any long-term trades in mind, I'd much rather short the volatility index, because the volatility index only goes up when the Dow goes down. But since the Dow has continued its upwards trend, I do anticipate the volatility index will continue its downwards trend. Anyway, that does it for me for today. If you guys want to use the same charting software I use, please be sure to check out the link right below this video. Any questions, just leave them below and I will try and answer them. And yeah, I'll just have more for you guys in the coming weeks and months ahead. Take care.